Welcome everyone to the Moneycontrol live stream. You are watching Markets with Santo and CJ. Well, what a volatile day as RBI hiked interest rates by another 50 basis points. We shot up initially in reaction to the action of the RBI, of course, given that it was mostly in line with estimates and therefore there was no surprise. But we have given up all of those gains and now are languishing towards the lows of the day. If you look at the Nifty and Sensex, they are set for a negative close at this point of time, and the losses are being led by Reliance, ITC, and few banking stocks as well, along with some auto scripts as well. So it is quite a negative closing on the policy day for the Dalal Street. Apart from that, moving on to the RBI action on closing tick today, me and Santo are going to discuss about our key takeaways from the monetary policy meeting. For me, Santo, there were two key takeaways. First was, of course, if you look at the comment that RBI Governor Shaktikanta Das made, he said that, and he said that repeatedly. Actually, he said that we are not bound by stereotypes and conventions in this at this point of time, given how dynamic the situation is. And to me, that seems like a tacit indication to the market that anything and everything is on the table when it comes to fighting inflation. And who knows, that might go to suggest even more intermeeting hikes could be on the offing. We have already seen one intermeeting hike happening in May, and if the data deteriorates further going ahead on the inflation front, then it is a possibility. Second, for me, is this comment that came in wherein the governor surprisingly said that growth impulses in the market, in the economy, are becoming more broad-based. There is good recovery happening, and recovery is gaining traction. So at one point on one side, the governor seemed very hawkish on inflation. We have seen the inflation forecast raised by almost 1,000 basis points almost. Apart from that, but on the growth side, he was quite bullish and optimistic, suggesting that the resiliency in the economy is still there. And I think that for me are the two key takeaways, which also highlights the current predicament we have on our hands. We have two, very contrasting views on the economy, on inflation, on interest rates. So, yeah, that is the situation at this point of time.
Well, yes, and in fact, the rally early this morning was quite surprising. After, of course, granted that the rate hike was imminent, and the governor had made it quite clear in his interview last month. That said, I think the road ahead looks quite bumpy, and the realization that, yes, inflation will continue to rise and rates are set to rise, that is slowly sinking in, and that is probably what explains the huge sell-off that you are seeing in the market right now. Till now, I think most bulls were at least trying to deny the fact that we are seeing a growth slowdown, but that now seems to be imminent, and that will start showing in the earnings sooner than later. And I think, CJ,
we will have to wait and see whether your theory of earnings downgrade plays out or not.
Yes, because see, if crude prices keep rising at this rate, inflation remains high. RBI has very little choice, and inflation for many of those things they're not even captured in the data, but you and I can feel that, in the everyday life. So they're talking about and this is what central banks across the globe are doing. I mean, they made it very clear that fighting inflation is their first priority.
I mean, it has to be. I mean, come on, if you're a central bank and inflation is at multi-decade high almost across economies, then I mean, what are you paid for, right? If you're not fighting inflation, so they have to be seen fighting inflation at this point of time. But I would probably still take your point about the economic slowdown with a pinch of salt. Yes, the RBI governor did allude to the fact that globally stagflationary winds are gathering steam. We had the World Bank coming out yesterday and warning the world that be prepared for many years of high inflation and slowing growth. And I think the RBI governor also took cues from that. But at home, I don't think there has still been that suggestion coming in from the governor. Even in the press conference, he seemed quite optimistic or quite confident about the pace of economic recovery, quoting some of the high frequency data such as rail freight and other volume, data such as auto volumes and whatnot. So I feel probably on the economic front, we are still not as bad as maybe the rest of the world.
Yeah, because
and I think that is the reason why our markets have probably been more resilient than others.
Because there seems to be a feeling that okay, if the US is slowing down, it doesn't really make a difference to us. But look at the look at the trade data in the US. You know, the imports are slowing down, which means that they are buying less of goods from the rest of the world, and that has implications for India also. Remember,
that is true. Yeah, I mean, of course, export stories were the theme of last year. So if those stories again take a hit,
add high import bills and the pressure on the rupee and foreign outflows, so it's a slightly looks like a dire picture for now.
Yeah, it is quite dynamic at this point of time and a very fluid situation. I mean, then again, it has been a fluid situation for the past 2 years, right? Since the time the pandemic struck our shores. That said, let's now move on to some of the stock actions out there on the session today. Starting off with Santo.
Voltas. CJ, now I know you're bullish on the stock, and I'm bearish on the stock since the fourth quarter numbers, which showed a sharp decline in market share in the air conditioner segment. Now, broking house MK says that during April, the company managed to claw back some of that lost market share. It's improved. But the point to be noted here, CJ, is that the market share is still low when you compare it with both for April 21 as well as for April 2019, right? So we are seeing pressure on market share even now. Overall, the air conditioner segment grew handsomely during April, close to about 60+%. But Voltas rivals are also gaining market share. Lloyd also managed to improve its market share by close to about 60 basis points. So it's pretty much a very tough fight out there. So if this trend continues, probably Voltas will be able to regain some more of its market share, but again that is going to come at the cost of margins according to broking firm MK. So this is a stock, CJ, I am a little wary of.
Santo, you are a tough man to convince. I mean, the company promised that they will start recovering market share in the first quarter, and so far the signs are that they are delivering on it, right? They have seen a 120 basis point month-on-month improvement on market share, plus demand growth, demand volumes in the AC segment or room AC segment remained quite robust, as you mentioned, about 61% growth year-on-year basis in April. Granted that, of course, the year ago month was the month of second wave, and second wave was quite prevalent. But even if you look at it from a 3-year perspective, annualized growth for room AC volumes have been about 14% on a 3-year basis. So that is still quite a sturdy show at this point of time. And for me, Voltas still remains a longer term play on the consumption side of the Indian economy. We will definitely see per capita income rising, more urbanization, and more urbanization means more room ACs out there, demand for more room ACs. And ultimately, this is a long-term demand story that is now available at quite a reasonable price. So for me, this is a very, very attractive script to be and then to be bearish on.
Well, CJ, people, the investors who have been in Voltas for the last couple of years have not really been making money because the stock was richly valued and had been moving in a narrow range between around 900 to 1300, and now, with the loss in market share, these valuations are now beginning to look expensive. Also, according to reports in May, across all segments, FMCG as well as consumer durables, demand has been clearly slackening. So April numbers were good, but May numbers again is something we'll have to watch out for, and probably that is what the market is also worried about, and you can see that in the sideways movement of the Voltas stock.
Well, one stock where there is no sideways movement at this point of time is Brigade Enterprises. The stock did quite well today, on the back of the booster shot that the RBI has given to the residential real estate sector. In the monetary policy announcement, the RBI governor released a few measures for the real estate space within which they have actually doubled the individual housing loan limit for cooperative, urban and rural cooperative banks, which is expected to boost demand for affordable housing out there, and Brigade being one of the companies which benefits a lot from the affordable housing side of the business because it has a large presence there. I feel this is one thing that is going to be quite a trigger for the stock going ahead, and we have already seen that momentum building up today in today's session, and going forward the demand or the demand outlook for affordable housing is probably one of the most robust within the entire real estate space. So for me, this is one stock that I will definitely be keeping on my watch list.
Well, CJ, if you Bangalore is such a hot market, right? And yet if you look at the last 3 years compounded annual growth, it's just about flat.
Well, Santo, 3 years include 2 years of COVID-19 pandemic and 1 year of overall economic slowdown. In that sort of a macroeconomic situation, if sales are flat, is it really that bad?
Well, compared to other real estate players, I mean, clearly Brigade Enterprises seems to be on the back foot. Besides, you also have this borrowing costs which are going up very sharply, and it's now it accounts for a significant chunk between last year and this year. There's been a big jump in borrowing costs as well. But that said, there seems to be a very clear disconnect between the stock performance and the company's performance, because between 2017 and now, the stock has doubled,
Yes.
but you're not seeing any move in the either in the top line or any consistency in the bottom line either. So I'm a little surprised. So probably the stock may still continue to do well.
I think it will. I think it will, Santo.
Bharat Electronics, now this stock is a play on the government's move to increasingly source a lot of production of defense equipment domestically. The stock has done quite well, CJ. If you
Yeah.
see clearly, it has been among the best performers, and even in a volatile market like this, it has managed to hold ground. So this is something, this is a story that the market appears to be really convinced about. Now, according to IFL, besides the fact that it is catering to government orders, it's also using its R&D capabilities and diversifying into civilian applications. Okay, it's in consortium with other players. It's planning to get into semiconductors, battery packs. So all those things are also there.
All the buzzing words.
Oh yes, buzzing words as CJ would call it. And besides that, the earnings outlook also looks very strong. The company has guided for about order inflows of close to about 22,000 crore this year. Last year's 19,000 crore was way above what the market was expecting. It expects robust inflows this year also. Execution has been a bit of a problem because of the semiconductor shortage, but that should ease going forward. And these reasons make me bullish on the stock.
Well,
CJ.
Santo, as you nailed it in the head, execution is the biggest concern. You can keep on getting orders as much as you like. If you cannot execute them and you end up having to pay delay penalties on them, then it doesn't make that much of a sense, does it? Now, for BEL, the import, most of it equipments, it has to import from outside, and given the geopolitical scenario that we are in at this point in time, you do not know which country tomorrow wakes up and imposes certain duties or certain restrictions on import of certain commodities, right, or certain equipments. Semiconductor, of course, is one of the bigger challenges for Bharat Electronics. It's not been able to secure enough chips to be able to continue with its projects, and that crisis will continue to escalate. We have seen some global CEOs come out and say that the semiconductor crisis will not be solved till as far as out as 2024. So that is 1.5 years almost of the crisis continuing. So for me, that remains a big risk for the company.
Some valuation comfort there, CJ.
So you
It's
can have valuation comfort, Santo,
20
but
times forward earning according to IFL. So that you've got very little to lose from these levels.
well, then I also have very little to gain if the company's earnings don't come through, right? Apart from that, if you look at you talk about the outlook on defense capex. Yes, indigenization is going to happen. Indigenization is something that we have been hearing for the past 7 to 8 years, right? But if you look at BEL's earnings performance, it's not really reflected that much, or it has not been that much of a kicker in terms of earnings performance. And given the troubles that the government has to face on the inflation front, subsidy bills are rising. It has to cut back somewhere, right? Ultimately, because it cannot let the fiscal deficit balloon to sky high levels. So I feel defense capex would be one space where it could see some cuts, or we may not see any growth, and that makes me a little circumspect on the capex outlook beyond 2023 at this point of time. Next stock, where the stock performance probably may not have justified the optimism that is out there at this point of time. It's Praj Industries. The stock has taken a beating this year and in the recent past. It has been probably one of the bigger underperformers in the market. But for me, this is one stock where the earnings outlook just doesn't justify that sort of a performance or treatment from the market. I mean, if you look at it, it's one of the best stories to play in the ethanol segment in India. The company's financials over a year-on-year basis saw marked improvement in FY22. It is also, if you look at it from a larger narrative point of view, the decarbonization that everybody's talking about in lieu of the climate change environment that we are in, plus the rising traction of bioeconomy in itself is quite a big trigger for Praj Industries earnings going ahead. Brokerage from Axis Securities at this point of time is expecting a 39% upside, Santo, 39% in 12 months upside in the stock, because it believes that a lot of the earnings traction will come in over the next 12 to 36 months for the company. It can grow its top line as well as bottom line in anywhere above 15% on an annualized basis in the next 3 to 5 years. So this is one stock that is available quite cheap at this point of time, and I would basically see it as a discounted sale at this point of time. I mean, this is an end of season sale on Praj Industries.
You know, some bit of history here, CJ. The ethanol story was quite hot back, I think, way back in 2007, 2008 also. That's when you had seen the stock, you know, really hitting, going all the way up to 250. That's on the adjusted price today. So this story was quite hot back then also. And between 2008 to almost 2020, the stock has really been struggling. It's gone nowhere. Much of the gains that you're seeing in the stock has suddenly come up in the last couple of years.
Yeah.
So long-term investors, you know, have clearly suffered in
Well, Santo, the gains have come in the last couple of years because the government has also become very serious about ethanol blending in retail fuel, right? The government has realized that it cannot keep on importing billions of dollars worth of oil, especially when a lot of it is not in its own hand. Now, ethanol blending has been one of the marquee, measures that the government has taken, the NDA government has taken over the past 8 years. We have already met the target 5 months ahead of schedule for 10% of ethanol blending, and now the next target is 20% over the next 2 to 3 years. And I see no reason why the country cannot meet that target. And 10% doubling of that target in the next 2 to 3 years means a huge amount of upside for an ethanol producer like Praj Industries.
Well, before we move on to the last stock on our watch list, let's take a quick look at the market.
Yes.
The Nifty has trimmed its losses. Now it's down about 52 points. It was down by about 100 points at one stage. Mid-cap still under pressure. Nifty Bank is flattish. IndusInd Bank is close to the day's low. It is at 914 rupees. Well, a lot of selling by insiders in IndusInd Bank over the last couple of days.
Well, Santo, if you look at the small cap also, they are actually the one that are outperforming slightly. The Nifty Small Cap 100 Index is down about 0.2%. But if you look at the constituents, some of the stocks that are really buzzing at this point of time in the small cap space is TV18 Broadcast up about 10%, PNB Housing Finance up 5.5%, Future Retail Engineers India up about 5% each. But on the laggard side, you have GNFC, Ember Enterprises, Fine Organics, and Kaplan Labs. They're down about 2.5% to 6% at this point of time.
Well, the last stock on our watch list today is Petronet LNG. Now, CJ, I know he's someone who's very bearish on the entire gas story, but this is a play on the rising gas consumption in the country, which is expected to grow at a compounded growth rate of about 6 to 8% over the next couple of years. Now, fourth quarter numbers were, no great shakes. Rather, you could say that was some bit of a disappointment. That's only to be expected because of the high spot prices of LNG. But very clearly, this is a story. This is not a 6-month story, but this is a 1 to 2 year story. And demand from fertilizer companies, refining companies, and petchem companies is only likely to increase in the days ahead. Besides that, many city gas distributors are now in talks with Petronet LNG for blending of LNG with domestic gas, given that there's only so much supply of domestic gas at this point. That being the case, this is a story that one needs to keep an eye out for, and good steady performance by the company also. If you see over the last 3 months almost now, the stock has risen close to about roughly about 20% in a very volatile market. So this shows that market is slowly buying into the long-term story of gas consumption growth in the country.
Well, Santo, you can't argue against 20% gains in 3 months. That clearly the momentum is on the side of Petronet LNG. My only concern would be that in the past also Petronet has had its days, and then it has tend to move in a narrow range for a very, very long time. So the only concern would be that if investors don't get themselves caught, or maybe you specifically don't get yourself caught in a momentum trap here, wherein you are seeing a good momentum here. There is good story behind it as well. But I just hope that Petronet delivers on those expectations. They're disappointing, like a lot of PSUs tend to do over a longer period of time.
So what are the things now to keep on the horizon? To
Well,
keep an eye
Santo,
out for?
we have had our central bank coming out with this policy statement, but tomorrow the European Central Bank will also come out with this policy statement. Now, this will probably be the most important or most awaited policy statement from the ECB, given that it comes on the back of that humongous 8% CPI print for European economy, which was probably multi-decade high at this point of time. Expectation is that the ECB will probably may not raise interest rate, but at least will guide towards stopping the liquidity gush that it had released in lieu of the pandemic, and also indicate that there will be rate hikes going ahead in the coming meetings. So that will be something that will be very critical even for forex markets, given the euro dollar peg, the way it has been moving. It will be a very critical event for, tomorrow evening. Apart from that, you have the Chinese balance of trade data coming out tomorrow morning. That will also be critical in terms of indicating how demand is recovering with COVID restrictions now slowly and steadily easing in China, whether demand is improving or not, and how the export side of the business is also doing.
Already the car sales, I think, for May in China have seen a big jump, 30% rise.
Yeah, exactly, a 30% month-on-month rise according to Bloomberg in car sales, retail car sales in China in the month of May. So clearly there is some recovery happening, and we will see more of that evidence coming out tomorrow morning. And lastly, of course, we have the US jobless claims data coming out later in the evening tomorrow. So that will be another key economic data point that the market will be tracking.
Well, thank you for those updates, CJ.
Yeah,
and with that, it's a wrap on this edition of Market with Santo and CJ. Please do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And as I always say, stay tuned to moneycontrol.com and Moneycontrol app for the rest of your financial news. We will catch you live again tomorrow 9 a.m. sharp. Till then, have a great day.